The broadcast is now starting. All attendees are in listen-only mode.
Hey, good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics. I want to welcome you to our webinar tonight on earnings, the number one earnings season strategy to apply as you go throughout the market this earnings season. We will be starting the webinar in about 3 minutes. In the meantime, if you have any questions for either myself or my colleague Dan France, who will be joining me in a few moments, please feel free to utilize our GoToMeeting chat room. We have the ability to go ahead and type in any kind of questions along the way. So if you have any initial questions that you'd like to ask, go ahead and fire away at any point, and we'll be happy to address them throughout our webinar. But again, we'll get started we're scheduled to begin at 4:15 Eastern time, so we'll get started in about 2 minutes. Thank you very much. All right, everyone. Good afternoon. Thank you for coming out for our webinar. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to our presentation on the number one earnings season strategy for incredible swing and options trading. Again, this is Joe Bacella here at Chaikin Analytics, Director of Client Success. Along with me is my partner here, Dan France, a good buddy of mine who helps us out with client success initiatives. And we're going to go through our strategy that we've developed along with Mark Chaikin to tell you a bit about as we navigate through earnings season, how we can help you out and how we can help you find opportunities to trade on. But we'll also talk about how you can apply those trades, when you should get in, when you should be getting out, how to determine when that trade is successful and ultimately to take your profits, or in certain situations, perhaps if you get into the wrong stock, how to manage your way out of it. So we have a lot of different situations that we're going to evaluate today, and we're really excited to show you how you can utilize our Chaikin Analytics platform and our screener to help successfully navigate earnings season. So I know we have a few of our current subscribers on the line, but for those of you I have not had the opportunity to meet. Again, my full name is Joe Bacella. I've been with Chaikin Analytics for about a year and a half now, working with Mark Chaikin on this program. Actually got my start. He pulled me away from the Vanguard Group, which is pretty well known for their longer-term buy and hold approach. Now, one of the things that I really enjoy doing here at Chaikin is I'm really excited to work with a lot of our subscribers on an individual basis as well as a small group basis. That's kind of what I was doing over at Vanguard until I got promoted away to a more of a back-end type of role, more of a data analyst role. When I met Mark and when he showed me his platform here for Chaikin Analytics, it was kind of almost like a love at first sight type of an experience where you just saw what kind of a fantastic platform, the type of analysis that's in Chaikin Analytics. And the fact that he had an opportunity to start working more hands-on with subscribers of ours was an opportunity I couldn't turn down, and it's been a wonderful year and a half. So again, I'm really excited to share with you the strategy, the type of approach that we've come up with during the time that we've been here. This is probably the 6th full earnings season I've gone through here at Chaikin Analytics, and every time we're getting more and more prepared to help you find the best opportunities. So we're definitely excited to show you the best that we have here. Now, enough about me. Dan, why don't you go ahead and introduce yourself to the wonderful people here and tell them what you're best at with Chaikin.
Sure thing. First, I'd like to say that thanks for having me, everybody. We have a lot of our subscribers on here. I've talked to many of our subscribers, thousands of subscribers in the 4+ years I've been here. And I want to start this by saying that I'm much better looking than that picture illustrates. Joe, however, looks pretty much the same. Yeah, I've been with Chaikin now for a little over 4 years, and I'll tell you, it's been a great experience. And like I said, I've talked to thousands and thousands of subscribers, of potential subscribers, and what I plan on doing today is just sharing with you just a real simple screening process that I get to share on a regular basis. I think it's going to make a lot of sense to everybody, not only in earnings season, but in pretty much any season. So let's get this thing going.
Awesome. Thanks, Dan. So for Chaikin Analytics, again, for those of you who may have heard of us here or there, but maybe this is your first webinar, you might be familiar with the Chaikin name through a variety of different outlets. I know we were just written up over in the Barron's article just a few months ago, actually. And I know Mark's recently made some appearances on CNBC's website through some recent commentary that he's made for the overall market, certainly while we were going through the Brexit. So you've seen our program as well as Chaikin Money Flow on a number of different outlets. But we're here to tell you a little bit about our approach to the market, our Chaikin Analytics platform here. What you're able to do with our program is that you're able to use our power gauge rating. You're going to see this for individual stocks. And what this rating is going to do for you is it's going to help you identify what stocks are trending, which ones have a greater likelihood of outperforming their EPS or underperforming expectations. And we'll also make you aware of those opportunities that you probably want to avoid. I have one of my favorite examples here in the deck that I'll show you later on. But it's a great way to avoid those lemons and hopefully not even have to go through the process of making lemonade. Now, we're also going to give you a better idea for not just the overall rating for the stock, but we're also going to look at some institutional trends to make you aware for the likelihood of a stock as it comes up to report its earnings. And then, of course, I have a great example from Mark Chaikin that he provided when it comes to timing, how to identify your proper entry point, but also getting an idea for when it's time to exit your trade. And I'm sure many of you here are trading options. We're going to help you get a strong idea for how to set your expiration, when to look for the exit. We have a wonderful options platform that we are excited to share with you. So, in fact, I'll tell you what, while we're on the topic of options, why don't we go ahead and get that chat room going. If you trade options, specifically if you trade options around earnings season, go ahead and chat in. Just go ahead and type in the word options if you are interested in trading earnings. And I'm sure we have some subscribers here who maybe take a little bit more of a buy and hold type of an approach. Maybe they're just kind of learning a little bit about trading options, but they haven't really made it their primary source. If trading options is your number one thing, let me know, just so I can get a better sense for who we have here in the audience. Awesome. So I'm seeing a lot of options. Very good. Good. So there's a lot of great interest here. I have a few examples in the deck, and I'll maybe even go over to our live platform at one point and show you some real-time examples. But we're definitely going to keep a very heavy focus here on trading options and how you can get that 50% return, 100% return, 150% return. So a lot of good stuff here to cover. Okay. So let's talk about some of the challenges here. We always like to start off these webinars. Whenever Mark hosts a webinar, whether Sandy hosts a webinar, I think we can all resonate at one time or another about one of the most common problems that we all encounter, and that is called information overload. We really like this slide here. We've actually had a few subscribers print out an image of this and hang it up. The reason why is that it's the best illustration that we've come across that explains the situation, the environment that a lot of investors find themselves in when they try to get a handle on earnings season. And information overload, there's so many different sources. You've got plenty of news outlets on TV, plenty of websites, and yes, we're proudly represented in a lot of those outlets, just like we saw a couple of slides ago. But at the end of the day, there's so much information coming at us all at one time. And so it really calls for a solution here. And the solution in our eyes is Chaikin Analytics, this very simple but very, very powerful platform available on our desktop app as well as on iPad. And it's a wonderful overview for just getting a sense for directly focusing on what stocks are trending. It's that simple. You could ask that type of question a number of different ways. What stocks are trending? Which one's getting the most attention? Where's most of the volume going? Simply enough, which one's got the greatest opportunity for a 14 or 13% drop off, just like Netflix last night? I'm sure many of you saw Netflix after hours yesterday. Overall, Chaikin Analytics is going to very quickly and efficiently bring to your attention those types of opportunities. And you can bet we're going to take a close look at Netflix later on in our presentation. So plenty more to stick around with as we progress through. Now, I briefly mentioned our Optionsplay program. Chaikin Analytics, the real value that we bring to you is our overall stock rating. Are we bullish? Are we bearish on a stock? What's the likelihood of the stock breaking out or breaking down? Well, eventually we kind of came to the realization, especially how rocky the market has been over the past year and a half. Maybe not so much over the past month or two, but I'll take that back, especially with the Brexit. But anyway, we realized the need to bring more options functionality to the forefront. And that information overload only compounds when you combine the challenge that is stock selection, finding the right stock, when also figuring out the right option to trade. So we partnered with a wonderful group called Optionsplay, and what we're able to provide right within Chaikin Analytics now is a single overall platform that helps you identify the right stock, but then also the right option strategy to utilize. So we've got plenty of different information within Optionsplay. I'm happy to share a lot of this with you. We're going to look at this for a few individual stocks, including Mark's one recommendation that we have in the program here. So plenty of more details regarding this overall Optionsplay program and how you can quickly and efficiently find the right options strategy to utilize later on throughout our presentation. So what are we looking at here? What are the main indications that we have in Chaikin? What is it that our program is composed of? Well, we give you a directional edge, and the way that we give you this directional edge, this advantage, is that we're combining fundamentals and technicals, and it's all throughout a completely quantitative model. There's no bias in our program here, right? Simply enough, we're taking a completely objective view. We're not having Mark Chaikin, or we're not having Dan over here pull certain levers for individual stocks and saying, buy Netflix, buy Tesla, whatever it might be. No, this is all completely objective and all from a completely quantitative standpoint. And we're combining these fundamentals and technicals to give you a complete picture and a complete assessment as we head into your stock selection process. So let's go ahead and zero in. Let's begin to focus a little bit. We believe here at Chaikin Analytics in a top-down approach. So what that means, a top-down approach, I'm sure many of you are familiar with this, but we're going to look very closely at the trend of the overall market. We're going to begin with the bigger picture. And we're going to use our Chaikin money flow. We're going to use our power gauge balance, bulls versus bears in the overall market. And we're also going to look at relative strength for one of our favorite ETFs to analyze. So what is going on in the overall market right now? For all of our subscribers, if I'm sure many of you were able to attend my pre-market session, we host a variety of webinars for our own subscribers. And on every Tuesday and Thursday morning, we host a session that all we do is just break down the overall condition of the market. And how we analyze the overall market, simply enough, is that we pull up our SPY ETF and we just analyze its recent performance. Now, again, what are some of those indicators that we just referenced here? Well, I want to bring your attention to our power bar because we're going to keep a lot of attention on our power gauge rating. Now, for our power gauge ratings, when we're looking at ETFs, what we're doing is we're simply referencing how many bulls and how many bears are in an ETF. After all, an ETF, all it is just a big bundle of stocks. And so when we consider that you have way more bullish stocks, 144 versus 48, you have nearly 3 bulls for every 1 bearish stock. And again, that power gauge rating is giving you a forward-thinking perspective. We're going to tell you more about this later on. So we're not just telling you how the market has been performing. We're telling you what we believe the market will continue to do. And when you see overwhelming number of bulls, it's no surprise that we've seen the market break out to new highs. You'll notice this trend that the overall market has been, and we've struggled to break out into new highs for the past 12 months or so. But what we've noticed lately, after recovering from your Brexit breakdown, is that we're able to break out to new highs toward our upper volatility bands. And it's no surprise to see this behavior when you have an overwhelming number of bullish stocks. And when you consider that the trend of Chaikin money flow, which represents the trend of larger institutions, has been positive almost entirely year to date, apart from the Brexit breakdown. So let's think back. It's funny. I was telling a subscriber this morning that it's amazing how long ago the Brexit reaction seems to have been. Nearly about a month ago now, where we saw such a significant drop off down to below 2,000 on the S&P 500. Well, here we are talking about an all-time high for the S&P just a couple of short weeks later on. So imagine how, obviously, again, it's so easy how quickly we forget, but it's amazing how far we've come with the overall market when you don't have the right tools available to you. When you see that you have overwhelmingly positive strength from institutions, plenty of buying behavior. And when you consider here our RSP ETF, the RSP is an equal weighted ETF. So it's meant to represent an equal share for all stocks in the S&P 500. So when you consider that its relative strength versus the market balanced overall, balance, you see that most stocks are participating in the overall market breakout. You're seeing way stronger performance, which tells you that it's not just a few of the bigger name stocks that are leading the way, kind of like the FANG stocks did last year. So this is the place where we always begin. And again, if you're wondering, how can I really fully grasp, my analysis of the overall market, I would encourage you when you subscribe to attend our pre-market sessions just for our own subscribers on Tuesday and Thursday mornings. So a little bit to add on to that top-down approach, the way that we begin when we analyze the overall market is we're always going to start with our overall power gauge rating. You start with that single bullish or bearish overall rating, and you begin to drill down within different industries. We're going to take a look at a few sectors that are trending. We're also going to look at a few stocks that have recently triggered one of our buy or sell signals. We have 6 different pairs of these signals to help you identify the right point to begin analyzing for your entry or your exit. And then we'll pair up with our Chaikin money flow and relative strength indications here. Now, the meat of what we offer here is our power gauge rating, that single overall rating. Just like Mark says, it's like the gas gauge on your dashboard in your car, right? So a single, very simple overall rating, but very, very powerful, as we're about to see. So what's under the hood here? Well, we have 20 factors in total. Again, a blend of fundamentals and technicals. You can't find this anywhere else. We're looking at financials, earnings, technicals, and experts. We're going to give a little extra emphasis here on earnings as we go throughout earnings season, but that single rating, whenever you're managing your long portfolio, or maybe you're trading options to protect longer positions, especially with all the volatility we've seen lately. Maybe you're just a swing trader, right? And you'd like to take advantage of these short plays during earnings season. Whatever it might be, this overall rating, this power gauge rating, can provide guidance for you, much needed guidance. It's a pretty simple question here right now. Does the rating work? What kind of results have we seen? Well, how do we determine success here? Well, the way that we make sure that this is working is simply enough. We're just comparing the performance of a stock of ours with a bullish or bearish rating, and we're comparing it back to the average stock in the Russell 3000. And what we've seen since we've been backtesting this back since 1999 is that the overwhelming number of very bullish stocks have outperformed your average stock, and gradually progressing on down, your bears and very bearish stocks have underperformed the market. So what does that mean for our options traders? Well, if you're looking for that significant swing, if you're looking for that sharp swing up for a bullish, you're buying your calls, you're going with the call vertical, whatever it might be, well, you're better off looking at a swing trade in one of our stocks with a very bullish overall rating. And then simply vice versa. When you look at very bearish overall rated stocks, you're going to be looking for those stocks that have the greatest likelihood of breaking down to the greatest extent so you can maximize your profits. So what we've seen throughout 2015, of course, 2015 was a very volatile year. And certainly with all the skepticism that we had seen in the market, plenty of reasons to hesitate, it's no surprise that the bears and very bears were leading the way with your profitable opportunities. This is why trading options is so important, so that you can cater to the needs of the market, cater to the overall trend, Don't fight the trend. This is why we use a top-down approach. Again, all of our subscribers who have been on our webinars, if you were on our pre-market session today, or maybe even our options session this morning, again, you know the need to keep a very close eye on the trend of the overall market so that you don't get in the way. And our power gauge ratings, again, are going to be your GPS for finding the right stock. It's worked out so well for us over the years that we've started up a few partnerships. It began with NASDAQ. They saw what we were doing, and they said, look, we need your help with this for NASDAQ. We want to take a few of our indices, and we want to see how they would look if we only focused on the bulls and the bears in Chaikin. Well, ultimately, the success of that project led into 3 unit investment trusts that we've launched with First Trust. First Trust, again, we have 3 active unit investment trusts, all based on hand-picked stocks from Chaikin Analytics for bullish and bearish overall ratings. Plenty more information about this available later on. Let's jump into our individual stocks, though. Let's start talking about what to keep your attention on. So we like to refer to these as our Chaikin classic bulls. And how do we begin to define these? Well, it's led the way by our overall power gauge rating, bullish or very bullish. And we're going to look for relative strength here in stocks to be outperforming the market on a consistent basis. And we want institutions to love the stock as well. Ingredient is a great example to consider here. Notice at the bottom of the page, we have our overall rating down here at the bottom. So you can see over the past 12 months how overwhelmingly bullish we've been on the stock. Today, at the time that I took the screenshot for the stock, you can see it continues to have a very bullish power gauge rating. Imagine being in a situation where you're sitting here in the stock, maybe in your long portfolio. As you go throughout earnings season, you can see how you're able to identify when a stock reported earnings. A stock of this condition, significantly positive, great Chaikin money flow, fantastic performance versus a very weak market. And ultimately, you'll notice a little indication up here toward the top saying that the estimate trend for the stock is in a bullish condition, that you have the confidence to stay in the position. You have the confidence to lead into earnings season and wait for the pop. Even after the stock recovers from the market breakdown back in January, you're back in the stock and you're hanging in there and you're leading into new high points. Here we are back in Q1, or Q1 results actually, reporting earnings, gapping up from about a little bit more than 105, going all the way up to about 115 overnight. That's the beauty of earnings season here. And if you look a little bit closely here at the top of the page, if you're wondering, well, 1, 2, 3 successes in this fantastic stock, well, when is opportunity number 4? You'll notice right at the top of the page here, we have the next date listed. It'll be reporting 2 days from Thursday, so a little bit more than a week from now. Again, and all signs are in great shape here. So Ingredient, a great example of a classic bull. Now, again, the beauty of trading options is that you can profit in either direction, right? So what does our classic bear look like? Flip all that criteria on its head. Consistent bearish power gauge rating. Again, we can find all of this. We'll show you our tricks for finding the best opportunities in a moment. You're looking for weak performance versus the overall market and consistent selling from our institutions. We mentioned Netflix earlier. Again, it's no better place to begin than by looking here at a stock like Netflix. As of yesterday's close in post-market trading, including what we saw today, Netflix down nearly 14%. Now, this is an example of one of your story stocks. We're all familiar with Netflix. I subscribe to Netflix. I watch movies on there all the time. However, let's not be too enamored by the future of what could be. Let's keep an eye on where the stock is today, because again, we're talking about your portfolio. We're talking about your money here. So when we look at Netflix, you need the guidance for the stock. You need to identify the right time to get in on the position. Noticing at the bottom, we've been bearish on Netflix pretty consistently since the middle of December, and it's been overwhelmingly negative since. Even when it reports positive earnings here, you can see how it gaps down significantly. And then what happens again? I know it's not reflected on the chart quite yet, but the stock trading down at about 85. You're going to see another significant gap down here when our information uploads tomorrow morning. So keep an eye out for that again. Netflix, just a great example of one of your classic bears. Nothing here to really rely on from a long position. So Dan, we're showing you these. We're showing the audience here a couple of great stocks, a couple of great examples here, but we're not really telling them how we find them. And kind of want to bring in the big guns here and have Dan show you around a little bit. Dan, show the people about exactly how we can find opportunities like Netflix or Ingredient.
I'd love to. And Joe, this is probably one of the biggest questions that we get. Our subscribers call in, they have questions, how do I find these ideas? Now, what I'm going to show you is a very, very simple screen, and that's really the key to using the screener successfully. You want to throw out a wider net at first. We can always tweak the screen, but the idea is to throw out this net and grab stocks that mean something to you. Now, what I'm going to show you is a simple screen that works great during earnings season, but it's going to work really pretty much any time. So we open up the screener. We're going to use the Russell 3000 as our stock universe, but let me just show you some of the choices that we have here. Now, for some of our subscribers, hopefully this is all old hat. If you're not using this, give us a call. We're going to show you how to use it. But we can see that our all-rated stocks would be 5,000 stocks. Our sweet spot would probably be the Russell 3000, though. But we could look at the S&P 500, say we can only zero in on strong industries. What I'm going to look for is a really simple screen. Now, what I like to do is swing trade. I like to play with the market. So I'm going to show you what I do, and we'll see if it makes sense. Now, I have a standard screen that I love to run. Now, the power gauge rating that I like to use is usually this neutral positive screen. Now, for those of you who don't understand what a neutral positive stock is in Chaikin Analytics, it's simply a bullish or very bullish stock that is dipped down below its long-term trend line. When that happens, we're going to take that bullish or very bullish rating, we're going to clip it to neutral, but say that the overall potential for the stock is. I like these stocks very much because I can use that long-term trend line sort of as a barometer. Now, since I'm swing trading, I'm looking for a stock that's going to give me a bigger pop over, say, a week or so. I'm going to get in oversold. I'm going to get out overbought. I don't want to be too greedy. I'd rather make a little profit over a little loss any day. But I know that because with so many stocks making all-time highs right now, there just aren't a lot of neutral positive stocks. So instead, we're going to leave it on the bullish rating. And like I said, I'm going to keep this simple. Anybody can do this. Go down to price level. I'm going to buy on a pullback. So I've already got a way to do that just by saying I want to buy it in an oversold position. This is where I'm going to take my. I'm always going to get in oversold and out overbought. It doesn't get much more simple than that. And then I'm going to go over to money flow. This is what put Mark Chaikin on the map about 45 years ago. And everybody uses this. We're going to gauge institutional accumulation distribution. Now, I like to use 1 month high persistency. I'm not looking for a flash in the pan. I want stocks that institutions are buying. Now, a lot of times we call that the smart money. We can't always call it smart. I like to call it the most money. And these are the guys that are pretty much laying down the price. So let's look what we have. We're looking at the Russell 3000. We're looking for bullish stocks in an oversold position that institutions are interested in accumulating. Now, if I wanted to, I could go down to earnings data and I could say, only show me stocks that are reporting within the next week, today, tomorrow. I'm going to leave that off because with our new earnings detail, we can see very quickly when these stocks are reporting. So, again, I've got here we go. So I'm going to click this screen and I come up with 24 stocks. Now that's really not a lot of stocks. What we do at Chaikin, we're going to teach you how to absorb that screen pretty quickly. But what I'd like to show you is a global filter. So I can turn on my global filter. What I'm going to do is I'm going to screen out stock below $20 per share, below 500,000 volume, and below 500 million in market cap. And for our options players out there, we only want to see stocks that are optionable. I click Save. Now you see it just reset my screen. I hit screen again. So I went from 24 stocks down to 10. So all of these stocks will have an option available. Now I can look at this list a couple different ways. I can save the list. I can just go right to and work this list. I could also save this screen. So very quickly, if I like these parameters, I could save them. And the next day when I wanted to open up my refreshed version of Chaikin Analytics, I can go to load screen and I can load any of my previous screens. I have a whole library of different screens that are going to give me. Let's just take a look at some of these stocks and see why I would be interested in looking at them and why you might be interested in looking at them as well. All right, so first the list OFC. Let's have a look. Now again, the idea with Chaikin is to line up as many variables as possible on your side of the table. You know, we're in a poker game, we want to win. So there's our power gauge rating. It's either going to be bullish or very bullish. I like to match my industry group. I don't want to chase a stock in a weak industry group because for me, I mean, since we're only looking at a swing trade here, I'm only looking for a stock going in one direction, that's up. So a strong industry group can pull up a weak stock, a weak industry group can pull down a strong stock. So let's get as many variables lined up in our favor. So there's our power gauge rating. There's our industry group. I like that. Let's take a look at the chart. And this is the beautiful part of Chaikin. The power gauge itself is about 80–85% fundamental. The rest is technical. But then we're looking at the screen, so we get a really nice balance, a really nice unbiased, unemotional picture of this stock. Again, like Joe was saying, this is not an opinion. This is cold hard facts. This is what's happened. The power gauge is a projection of future potential. So what do we know? We know we've got a rising long-term trend, 21-day moving average. This middle dotted band is also moving up. We see money flow, nice accumulation of money flow. Institutions or buyers heading into an oversold position, which probably accounts for a dip in the price. And that's what's great about the overbought, oversold gauge. We can see this line that we generate. Look at where it intersects the overbought, oversold gauge, and look at the activity of the stock. It's almost like clockwork. It gets over. So obviously this is where you want to make your entry point. So it's getting into an oversold position. That's probably why we have a dip here, but we're looking for a rebound. So we've got money flow in an oversold position. We've got positive relative strength. I'll tell you, when you get relative strength, money flow moving in the same direction, it's pretty favorable. So this would be a very interesting stock to take a look at. Let's say I didn't know anything about this stock. I know it's in the real estate industry group, but I could also click on this little information tab and get a quick overview of the stock. So I love how it looks on the chart, but I have no idea what it does, what the company does. I can find out pretty quickly. All right, let's take a look at this next stock. This is AT&T. There we go. All right. Again, what do we see? Again, a rising long-term trend. 21-day moving average also rising. Very bullish power gauge, strong industry group. All right, I like it so far. Look at the money flow. All right. Smart money's doing something with it. They're accumulating it, and as a result, we see the price going up as well. Oversold position. We see a dip in the price. Going to present a better entry point for us. Relative strength. It's positive. And this is something else I like to do. Look at this power gauge. You know, people ask me about backtesting results. Well, you can backtest absolutely any stock. Look at this power gauge change. This is important. When a stock goes from neutral to bullish, to take a look at a stock. So back on January 25th, we went from neutral to very bullish. And at that point, look at the money flow. We had just started accumulation. We had positive relative strength. The power gauge went from neutral to bullish. Why? I have no idea. But that's the beauty of the power gauge. This is what Mark Chaikin put together. It's going to take a lot of the heavy lifting out of the way for you. So we have ways to show you stocks that just went from neutral to bullish. You can look at that anytime you like. So had you known about that, you could have gotten into AT&T around $35. So not a bad ride. So that's really, we could take a look at all these other stocks, but they're all going to look basically the same. Some of them are going to be down. Again, it's no reason for alarm because they're in an oversold position. But what's going to happen is hopefully they're going to be presenting a better entry point for you. And that's just one screen I do. And if you guys, if anybody that would like to talk about, you know, how I put this together, just give me a call. We're happy to take calls and answer any questions you might have and help you do the same thing. And again, this is just one screen. We can help you set up screens that help you find stocks that mean something to you and your strategy. And again, not to forget, we are talking about earnings. So we do know that here's AT&T getting ready to report. All right, so far, the estimate per share is 71 cents. Now, as we get closer to reporting, we're going to tell you via a little logo whether we're reporting pre-market, during market, or after market. And we can see in the past, we can plot prior earnings dates so we get an idea of how each of these stocks respond to earnings. All right, well, again, that's just one screen, and I'm happy to talk with anybody if you want to give us a call.
Beautiful. Well, thank you so much, Dan. Tell me, if you think Dan's demonstration there, if you thought that's something that you might be able to replicate, go ahead and type in the word easy. Let me know if you think the screener there was easy, if that was something that you could go ahead and utilize yourself. Every morning when you're going through Chaikin Analytics, you're going through your program, you're lining up your next earnings trade. Again, if you thought that was something that you could utilize, again, if you thought it was pretty straightforward, go ahead and type in. And I think that'll be a great understanding for what to expect going through. So awesome, cool. Well, I'm seeing a lot of great examples. So I'll tell you what, you've seen a nice little summary for putting yourself in that position where you can find the next opportunity. Let's go into some of the details. Let's go talk about some of the more detailed information. We've spoken a lot about the power gauge rating. We've spoken a lot about relative strength, but let's go ahead and put the two together. So we'd like to refer to our dynamic duo here as the power gauge rating, telling you whether we're bullish or bearish, and whether the stock's performance has actually been consistent with what we'd expect from the market. And the way we determine that is by using our relative strength indication. So something to refer to here, again, I know we have a lot of our subscribers on the webinar right now, and we spoke about Citrix today. We spoke about Citrix during our options session, and I like showing Citrix because it's a great example for a stock that is consistent. Right? Consistent is one of my favorite words here at Chaikin Analytics because you want to have something that's predictable, something that's replicable, something that you can utilize day in and day out, and you can expect reasonable results. So the reason why I like to point out Citrix here, not only because it reports a week from today, and I just drew over it, but as Dan noted here, you're getting a very strong estimate trend in the stocks if you were to hover over this in your program. But look at 1, 2, 3 recent examples where you've seen the stock pop around earnings season, right? Even 4, all the way, thank you, Dan. Dan pointing out over my shoulder here that we've got 4 great examples where you have the stock breaking out and making new short-term highs. And remember, with your earnings trade, we talk a lot about the setup of the stock. We're talking a lot about the current condition of it. But remember that you're getting in and you're really getting out just about a day later. Look at your example back here from May or late April, where if you wait too long, you're right back down to the point where you started. So this earnings trade, and again, this isn't a swing trade. This isn't meant to be a long-term position. This is an earnings trade. You're in and you're out. Again, we're going to go over some details that Mark provided soon, but the whole idea here when you're looking at the stock is, allow a gift like Citrix, allow the gift to keep on giving. It's a beautiful example of a classic bull that keeps on doing very well. If this is in your long portfolio, perfect. That's great. Citrix is doing really well from you from a long-term perspective. But if you're just here for a quick hit and a smash and grab, as I like to refer to it as, that works fine as well too. So Citrix, a great example. And one of my favorites that I like to tout, not to brag, but really just to kind of show you that it works, is when you're looking at a stock like Cavium. This is one that we found in our option session a couple of weeks ago, where really, I guess it's been about a month now, where not only did the stock trigger a sell signal, but it also happened to report earnings. And here's a case where a bearish stock, a case where we've been bearish on it for a long time, and your relative strength is right in tow. You've got a bearish rating, you've got weak performance, and oh, by the way, institutions are right there with you. Everything lining up very nicely, and let our signals help you out. Let us try to help you find a trend that's developing. The signals in this case, your relative strength sell signal, you can clearly see that there's trouble in the water here. So you're in for 2 dips. You're here for a quick swing trade where you're in and out of the stock, or even if you let it go long, it tends to work out in your favor. And then you come back here for a swing trade. Again, if you're trading earnings, then you're probably swing trading too. So you're getting in here for a nice 1 to 3 week move. You'll notice how the stock with our RSI indication overbought, oversold, you'll notice how it goes from overbought. And then we're in the right place at the right time because right around this point, as you're approaching an oversold position, you see that the stock comes out and decides to acquire another company, which didn't really go over too well, and you're down another 17% in the stock. So your options trade I've had 2 subscribers tell me they made 150% just on that swing trade. You would think you're going to make 150% on an earnings trade, but in the swing trade, that's fantastic results. So Cavium here, one of my favorites that I like to point to. And again, it's another candidate that reports next week. And you've got a warning here about your upcoming earnings, your EPS for when it reports. Tesla. So I talk about Tesla a lot, but that doesn't mean that I like talking about Tesla. The reason why is, like Mark says, again, Mark's a pretty creative guy. He comes up with a lot of phrases that I like to copy and steal from him. Mark says, drive the car, sell the stock, right? If you've heard Mark say that before, again, you've probably been on one of his webinars. And you can see a few examples here where we're all familiar with Tesla. Again, if somebody was to chat in right now and said they're not familiar with what Tesla is as a company, then I really wouldn't believe you, because Tesla here is a story stock. You'll notice that I'm referring to it here that even my buddies who don't know anything about investing, they know about Tesla, right? So the issue with Tesla is, though, just a moment, is that you have very inconsistent performance here. You have a reporting positive and you have the stock gapping down. Here you have it disappointing with earnings and it gaps up. Here it reports weekly and it does nothing but go up for almost an entire quarter. And then ultimately here you are again when it finally begins to do what you would expect. But this is just a case where, again, because everybody's heard of Tesla, I get a little worried whenever I hear about people who are talking about Apple and Netflix and Tesla and a lot of these bigger name stocks. I like to use these in our webinars open to the public because, we like to find a point of what we have in common with each other. And we want to show you through a clear perspective what we should really be thinking about these bigger name stocks. And so in this case for Tesla, you can see how it's not really a winning situation. You have a lot of inconsistency here, and it's pretty tough to get your earnings trade right. So Tesla is, it's important for us to talk about Tesla because it's as important to know what to invest in as it is what to not invest in. So Tesla's like one of those that I like to kind of stick up on a shelf and leave it aside. Instead, I like to look for, no pun intended here, I just realized this right now, but I like to look for some more uncommon stocks. Some rarer stocks, RARE here. Ultragenics. We're going to talk about the pharmaceuticals and biotech stocks later on, but you can see the clear picture here where you have pretty consistent disappointment. Here's a case almost 12 months ago where the stock reports disappoints and the stock gaps down. You have a few other situations where the stock, again, continues to disappoint. A little bit of a better example over here most recently. Now, we mentioned that the power gauge rating consists of 4 main categories: financials, earnings, technicals, and experts, right? And when you look at this stock, you notice that it's got an earnings warning. It's reporting a couple weeks from now, so you're buying yourself a little bit of time. I know we have a few subscribers who like to buy themselves a few weeks early on before the volatility crunch hits. But when you're noticing that a stock like RARE here has a very significant sell-off taking place by way of money flow, and you have a weak rating for earnings, you're lining yourself up very nicely and responsibly by using the research available to you, which is exactly what we specialize here in Chaikin Analytics. So again, use the screener just like Dan demonstrated to help you find some of those more uncommon situations. I told you my favorite word here at Chaikin Analytics is confidence. And whenever subscribers tell me that we give them confidence, it's one of my favorite emails to receive. I always show this during my webinars. This is an email that I received right from my inbox, totally unprompted. This is a gentleman who attended one of my onboard sessions. I host these along with Michelle Greenblatt, part of our client success team, who goes over these onboard sessions every afternoon. And along with me, and we received an email from a gentleman who happened to attend my session telling me, look, I made $700 on my first put option, but he's expressing a little regret here. I only purchased one. I only did one put. If I wasn't so nervous, it would have been $7,000 on a $5,000 investment. So thank you for giving me the confidence that I never had in my stock and option trading through Chaikin.
It's funny. You put this up here, and it's got the word confidence here, and I love this because I got to tell you, like I said in the very beginning, I've talked to thousands and thousands of our subscribers, and we don't just talk to you before you subscribe. We talk to you after you subscribe. And after our subscribers are in for a while, one of the words we hear the most, completely unsolicited, just like we can see in this email, is the word confidence. You know, we hear two things really on a regular basis. Chaikin gives me the confidence to stick with my trade. Second thing we hear on a regular basis is Chaikin saves me so much time. What used to take me hours, I now do in literally minutes a day. So, you know, if having confidence in what you're doing and saving time is in your wheelhouse, then, you know, we should definitely be talking.
Yeah, so leading into some more detail, so let's go ahead and clarify what exactly we love so much about earnings season in particular. The volatility can be our friend. Volatility is used pretty frequently in a negative context, and that's not necessarily fair. I think it's used in a negative context because most people tend to find themselves on the wrong side of volatility. Volatility is opportunity, right? We want that word to be synonymous here. Avoid the speculation in media around earnings season. Those big name story stocks, again, TV stations have to get viewers. They need to get your attention. And if they need to show you examples that aren't really going to work in the best interests of your portfolio, then they're going to do it. So instead, you need an unbiased perspective here. Become more aware for whether a stock is going to meet, beat, or disappoint. And I think we're doing a pretty good job of showing that. I hope you agree. We're going to get a little bit more hands-on, of course, with our Optionsplay program here as well. Speaking of story stocks, right? Stocks. I'm on an iPhone right now. I'm using a MacBook. Dan's using a MacBook right now, so we're totally up with it with new technology these days. So one of our favorite companies happens to be Apple, right? Now, Apple is a great example for one of those stocks that you need a clear look at for. Now, we're looking at a 5-year chart for Apple. And you'll notice over the course of the past 4 years, really from 2011 through the second part of 2015, we really started turning our opinion on the stock. We weren't really that bullish on it much more. So we found its peak. You know, when you see a stock that was bullish and is no longer bullish, we call that a personality change, where it's no longer in favor in our program. And like Dan mentioned, but you're below your long-term trend. You no longer have the guidance of our GPS, that overall bullish power gauge rating. And so you're looking a bit more defensive. You're you're utilizing some covered calls on a stock. You're selling the position altogether, depending on how long you've had it. Maybe you're taking some profits here when you see that danger is coming. When you take a closer look at Apple, there's been too many pump and dump examples. Before I go back to the 1 year, take a close look at Apple right around this time frame here. So this was right in the beginning, right in the middle of the year, right around when the whole correction was just about to take place. And you'll notice that you had a positive earnings report. And I want you to look at these 3 bars right here. I know it's, forgive me if this is a little tough to see, but notice where you have a huge lead up in the stock, like pumping up. And then when it reports earnings, you see a pretty significant gap down. I'll never forget that we got an email from a subscriber. She had only been with us for about 1 week. And she told me, look, I was really tempted to buy calls on Apple leading up to this earnings date. Again, you have to take my word for it since I don't have a copy of the email available. But she said, look, I pulled up Chaikin Analytics. I've only been with you guys for about a week or two. And I was very tempted to buy calls on the stock. But because Chaikin Analytics told me that earnings for the stock wasn't in good shape, because the stock was neutral here, I decided to pass on it, and ended up saving her a ton of money and premium that she would have paid for those stocks, that for those options that still to this day would be worthless even if she went very far out for her expiration. So we zoom in a little bit closer and we look over the past 12 months, the most recent time that Apple reported. And overall, not only are we not expecting growth in the stock, but we're now bearish on it. We've been pretty consistently bearish. When we're bearish on a stock, just like a lot of those classic bull examples like Cavium, we're not just saying that the stock's doesn't have growth potential. We're saying the stock's value is going to go down. So when you look at how worrisome the overall stock has been, again, if you're trading Apple, you're just simply going on momentum. You're not going in with guidance. So you know to get out when you transition from bull to neutral. And now that you're going from neutral to bear, you've got to worry. There's blood in the water here. And so here's Apple gapping down significantly from about 105 down to about 95 last time around. Here we are again with the overall stock. Again, an earnings warning up here for the stock overall when it reports about a week from today. So the information's out there. It's all about paying attention to the right stock. A few other big name stocks. Again, Amazon is one that we like to pick on a good amount. We get plenty of testimonials from subscribers who say they're able to make so much from Amazon for earnings trades. This is one that Mark called the day that he was hosting a webinar, down about 11.5% at the time. So great performance, again, just by setting up the right stock and then trading options as a reaction to the downward move in the overall stock. I always like referring to options as we're just reacting to the performance of the stock. Google and Priceline are two other ones that we've had subscribers do very well with. $17,000 profit in options trades on Google, on Amazon, on Priceline, all from checking the power gauge rating. Chaikin Analytics, again, it is a godsend of a tool. And again, I can speak for Dan when I say this. It's a pleasure to be involved with the company here. And again, you can have success with this in a very short period of time. 2 weeks can turn around your entire trading approach. So very, very quickly. Another big name, McDonald's, right? This is a little bit of a better situation. Looks just like the stock we were just looking at, Apple. McDonald's in this case, again, though, doing very well, walking a tightrope without a parachute. Again, another Mark-ism. And now you're noticing dynamic duo down here. You go from neutral power gauge rating to now underperforming. Neutral to bearish, beating the market, and now losing, underperforming a very strong market rally that we've all been a part of. So institutions, again, you can see they're not really on board either. A little bit of a rally taking place, but like Dan was mentioning for these stocks, way below your long-term trend. And after 3 cases where McDonald's has reported positive earnings, here we are. We're a little bit of a change in the wind here. Again, you've seen positive performance before. We're not just going to look back at recent examples. Instead, we're going to look at when a change is due. And again, when we see the overall rating for earnings here is pretty bearish. Stock reporting again. We have tons of stocks reporting next week. I hope this is a great preview for what you plan on setting up next week. Hopefully, we're buying yourselves a little bit of time here. But again, that's exactly what you can do with Chaikin Analytics. Now, we like to refer to playing good defense as a great way to protect your long portfolio. But again, the beauty of trading options, I can't really emphasize it enough, is just the ability to find an opportunity where weakness is. So find the stocks that you don't, it's the stocks you don't want to own, right? You don't want to own them, but you do want to cash in on them. I like talking about biotech a lot. I don't, if you really want to see the power of Chaikin Analytics, in my opinion, look at biotech. Now, we're looking at our sector analysis platform here in Chaikin. We introduced this just a few months ago. And what this allows you to do, remember that bull, neutral, and bear overview for the overall market? Here's the SPY. Well, we do the same thing for sectors and subsectors here too. So you can imagine when we have a power gauge rating for our ETFs as a whole, it's going to be a really powerful tool that you'll have at your hands. So when you look at biotech here and you see an overwhelmingly bearish balance, right? Most sectors are significantly bullish. Biotech takes the cake for the bears. Very, very weak. I'm looking at 6 bulls and 34 bears. Pharmaceuticals here, 6 bulls and just 7 bears. You know, I know a lot of people like to fish in bearish stocks, fish in biotech stocks to potentially see a breakout. But think of it from a probability standpoint. What's the smart play? You've really got to think about it. So Agio is one of those stocks. You can see within the program your subsectors group available. We're looking at biotech right now, and here's Agio right now. And it's got, very importantly, very bearish overall rating. Reports a couple of weeks from now, you can see it's kind of getting ahead of itself, down nearly 3.5% today. And simply enough, what are institutions doing? Right? You're seeing that pretty significant sell-off here. And simply enough, after a quick period of beating the market, you're right back down to where you were. Without a bullish power gauge rating, you can't really be thinking about growth here, at least not consistent, reliable growth. So Agio, a great example of a stock that, again, you might not be too familiar with this. I know, tell me a little, I know question might be a little late for me to pose, but if you're buying biotech right now, go ahead and chat in. Just go ahead and tell me, I'm buying biotech or something along those lines. I want to know if you're interested. Are you bullish on biotech or bearish? How about we'll do that? If you're bullish on biotech, and again, pretend like I was asking this question 2 minutes ago, but tell me if you're bullish on biotech or bearish. I'm really, really interested because again, we're looking at it from a bearish perspective here. So see, we're pretty much split. So you can see there's a pretty good split between the two with biotech. And yeah, there are winners like BIIB, no question about it. bullish overall rating in Chaikin Analytics. But when you're thinking biotech, it's one of those groups where, because you have so many more bears, you've really got to go with the trend of the overall sector, go with the overall market. Another sector that we like to pick on here, some of our favorite stores, some of our favorite bears. Retail here is another sector really struggling. You'll notice it's just a few points above biotech, and you'll notice that it's got barely a little bit more bulls than bears, but still, when it comes to its overall rating, when it comes to the fact that it's still underperforming the market, we're going to be looking at a lot of these stocks, a lot of these familiar names as our opportunities to buy, or to, pardon me, not buy, but to look for a bearish approach. We all know Macys. We're all very, very familiar with Macys, I'm sure. This is one of those cases where it's about more than just EPS with your breakdown. Overall, in this case, again, you've got your rating very weak for Macys. Again, if you're one of those investors where you want to buy yourself way more time early in advance, maybe you need more than a week to set up your earnings trade, you're noticing that the stock, again, does report for a little bit more than a month. However, earnings, bearish overall rating, money flow, very inconsistent. Yeah, a little bit of positivity, but the inconsistency is not something to take confidence in from a bullish standpoint. So plenty of opportunities where the stock is gapped down, considering that the overall sector really isn't that strong. You're going to be looking at Macys as a possible bearish play when it comes time for earnings. How about with Chipotle here, right? I mentioned earlier that Mark had as a stock that he wanted to contribute. Mark's on business in New York right now. And so what I wanted to make sure was, for those of you who are again, new to the Chaikin community, Mark writes a newsletter every week. It's called our Chaikin Insights article. He and John Schlitz are our market experts here. And every week, Mark makes a stock pick. And when it's earnings season, you can bet that there's going to be an earnings play. So Chipotle reports on, let's see, where is it? Thursday. It reports Thursday the 21st. So just a couple of days from now. You have an overall consensus estimate going bearish, right? So we're not expecting much from the overall stock. The overall stock, again, very bearish rating. Institutions want nothing to do with the stock. When you read the details here from Mark, you're going to go with a bearish vertical. So a debit spread here on the stock for Chipotle, pretty close to Thursday's earnings, due out after the close of business. The idea here is, when you pull up our Optionsplay program, let's go ahead and take a look at it right now. Just a moment. Optionsplay allows you to get a better idea for what type of trades you can make. So if you're in a position where you spend any more than 30 minutes a day researching an options position, you're navigating through options chains or whatever have you, we have a solution for you. Optionsplay is your solution. Now, you find the stock through Chaikin Analytics. And remember how we were talking about a pump and dump situation? Well, here's Chipotle today, up almost 2%, right? Just like Apple in that example. And here it is going up. And so we're not relying on recent performance in a stock to determine whether we should be trading or not, because that's not reliable content. That's not reliable material. Instead, we're going to look at the overall rating. We're going to look at money flow here. You're going to see relative strength here, very, very, very weak here, very consistently underperforming the market. So what does Mark tell us? Take a look at the put vertical suggested here in Optionsplay. The beauty of the put vertical is that essentially what you're doing is you're taking what would effectively be a normal put that you'd buy, and you're just collecting some premium. You're collecting premium by selling a put near your target price, and you're knocking down the overall price of the stock. Pardon me, the price of your overall trade. Now, there's more details. Again, I don't want to give away the entire farm. I really want you to join our Chaikin Analytics community to see the full details for how to utilize this trade. Mark provided some finer tuned modifications. So for those of you who are current subscribers, I want you to take a close look at Market Insights for more details. But I'd love for you to consider Chipotle again, and specifically the trade that Mark outlined and detailed in order to take advantage of. And again, Chipotle is one of those stocks that you'll find under the consumer discretionary roof. So again, a stock a little bit more synonymous with retail. You can simply go back to Nordstrom, right? You've got weak performance with earnings. You see the significant gap down. You see the relative strength. Again, it's bearish after bearish after bearish stock. Plenty of examples, overall ratings. And again, institutions This is what you want when you're buying. This is not. This is abandonment. This is an illustration of a stock that nobody wants anything to do with. Nordstrom is the only other stock that I can find in Chaikin Analytics. I have to say I haven't screened for them, but can't tell you there's many other big name stocks that all 4 categories in our power gauge rating we want nothing to do with. So again, a great retail stock that you can consider a little bit less than a month from now. Why are we doing all of this? What's the whole purpose for all of this work, all of these details? Well, yes, we're here to make money, but think about some of the other benefits that you get from successful trading. One of our favorite testimonials came from Jim here, who said, look, how about just a better night's sleep? How about having something reliable that you can rest your head on when it comes to trading earnings? There are plenty of examples of people who got hammered in 2015 in August when we went through a couple of corrections. But being on the right side of that volatility is very important. Having the guidance of Chaikin Analytics, remember the day before GPSs. I remember when we would drive when we had to use an actual hard copy map, right? And the stress that would come from missing a turn or not knowing where to make a turn in an unfamiliar area. That's the kind of stress that we're talking about here when you don't have the right set of tools. Now it's as easy as following a simple map automatically updated for you. Chaikin Analytics, we're doing the same thing with your portfolio. We're giving you the right direction to go in. And we've seen that through our unit investment trusts. Again, very similar to mutual funds for those of you not familiar with them, where we're being able to provide guidance for what the strongest stocks in the overall market are worth following and what worth keeping an eye out for. Let's go through time a little bit here. So, I just mentioned, let's hark back on a time where we didn't have GPS. Let's go back to a time where Netflix was all the rage. Netflix back in 2014, right, you can see this is a great example for a stock where reports earnings, you've got your sell signal, and eventually you're leading into pretty significant breakdown. Now it's 2014. Why am I talking about 2 years ago? Well, we've been getting pretty consistent results from our subscribers. I always like to share testimonials. I always like to share positive performance here. But how about back in April, right? You can see this is a case where where Netflix reported. They go from a 111 down to about 90. And again, despite EPS, you can see the stock dropping down and you're gapping down if you're buying your puts. And again, how about just yesterday with Netflix, where it reports down about 13.5%. And again, the stock just keeps on going in the wrong direction. So it's a great example. It's a stock that institutions really don't want much to do with. Great example of a pump and dump, not to mention. So again, keep that in mind as McDonald's leads up for earnings reports. So Dan showed you his favorite example. I'm going to show you my favorite screener example. We've shown you a lot of great big name stocks, but again, it's about those diamonds in the rough that I want to share with you. So let me take this opportunity to show you my screener criteria. And again, this is typically what I demonstrate on a daily basis or twice a week type of basis. So when we're doing our option sessions, and simply enough, when I go to my saved criteria, I'm not even going to type in the criteria. I'm just going to go right here to my overall rating. You can see how I save the criteria, 1 click, 2 clicks, and I've got my screener. I've got my results here. So you can see just how easy it is for me to break down and just find a list of stocks to begin with. To take a quick look, right? If I want to view each one of these, all I need to do is click on the word results. Or I'll tell you what, let's go ahead and even create a list, just how easy it might be for me to do this. I'm going to go ahead and click on Save List, and we'll call this Joe's Bullish Earnings. And within just a couple of seconds here, I've got my new list that I can reference. Chaikin Analytics, you have the ability to create as many lists as you like. Maintaining a watch list has never been easier. Creating a list from the screener, again, never been easier. You can see just how quickly and easily you can access these stocks. Here's Dan's stock, AT&T, that he was looking at. You can see available in the list. But I'm going to go ahead and focus in here on a stock with one of our buy signals, PEB, Pebblebrook. So this is an overall stock here that has been slowly getting back up into positive territory, going through a little bit of a positive personality change. And even just today, triggering a momentum breakout signal, right? The stock breaking out above its upper band. Now you've got earnings coming up in less than a week. And when I look at the overall rating for the stock's in great shape. But when it comes to earnings, you're seeing positive behavior here. And you've got your overall strong performance with earnings to the point where you're now just cracking into positive territory for the first time. For all of you longer investors, you've got a yield here, if you're interested in your dividend, of about 5%. So not too bad at all. So if you're looking for an earnings play, if you're looking for a new long position to add to your portfolio, Pebblebrook giving you a few examples to consider. So these types of screens, again, I always share these with our subscribers. You're welcome to write these down and use them in Chaikin. You can pull them up very quickly and assess them. You can always utilize it for a bearish approach. You can just simply switch all this criteria to bearish. And again, it's just a very quick and easy way to be able to find the next top trending stocks. A few others that I found from that screener. You might have noticed DHI, DR Horton was in that list. Again, a few examples here for the stock doing very well. Overall, back here, very strong report back in November. Stock just recently actually trading about even after its report. But what are we interested in most recently? Well, simply enough, you've got a positive report here within earnings. You've got the overall rating for earnings in great shape. Institutions are into it. And you can see simply enough when it reports, was that Thursday? That would be next week. No, that would be this week. That would be in 2 days from now when Chipotle reports. Another great bullish opportunity to consider here. So, Express Scripts, another stock that came up, looks pretty similar to what we were looking at initially in the screener, where you have a situation for a stock where look at money flow before in the first quarter, and then look at money flow after. I'm hoping you can see the difference here of way more positive behavior, way more confidence versus way more disappointment here with selling. You've got the same kind of trend here with relative strength going from negative to positive. You've got a great overall power gauge rating for the stock. Reports on Monday of next week. Its overall estimate trend is very bullish. You can see the earnings rating. I know it gets cut off a little bit here, but you can see we have an overall bullish power gauge rating. So again, this is our GPS for earnings season. This is exactly what we're trying to hope we can get across here. So you're not going to be doing it alone. You're not on your own with our approach here. Instead, again, we have a whole webinar program that we'd like to tout. We're very proud of what we provide, and we're not just kind of getting you in the door and leaving you be. Instead, we have a whole support program, and again, the best emails I get are emails from our subscribers telling us, look, I've been able to completely turn things around. Here's an email I got from one of our swing traders who told me, again, my favorite word here, confidence. This isn't really being prompted by me. This isn't biased. This is completely naturally provided from a lot of our subscribers telling us that we're giving them the confidence to utilize our program. So this is exactly where we want you to be. Put yourself at ease. We have all the testimonials in the world. 2 weeks of using Chaikin, again, trades of 400% return, or even a Google put spread. If you're wondering how to set up your spread, Optionsplay is available for that, just like we showed you for Chipotle. It's available for all stocks, whether you're trying to figure out the right trade to make, or simply enough if you're better off moving on to another opportunity. So these are the type of returns that you can see in Chaikin Analytics. So it's time to put this in your hands. Again, our solution is available on desktop. It's available on your laptop. It's available on your iPad. We have a whole dedicated app just for the iPad. And just by subscribing, you'll have immediate access to Chaikin Analytics. This is something that you can analyze today. We're getting right into the thick of earnings season. Right? We're starting today. How many stocks did we show that we're reporting either this week or next week? I'm willing to bet about 80%, if not more, of the stocks that we spoke about today are going to reporting. So the time is now. The time to take action is today. So putting Chaikin Analytics in your hand, again, accessible right on your computer, just like you're watching this webinar. And again, all of the testimonials that we can share with you. Again, people citing our options program, our screener program, helping you find the best opportunities out there in the market. And again, we're proud to be one of the best products out there in the market. So Chaikin Analytics, what we usually sell this for a full year access to Chaikin is about $19.50 for a full year to Chaikin. Now, when you look closely at Chaikin Analytics, again, if you go to chaikinanalytics.com/earnings, you can go to chaikinanalytics.com/earnings, or you can send us an email, sales@chaikinanalytics.com. You can also give us a call at 877-697-6783. We're going to be offering a $200 discount between now and Thursday. So again, $17.50, $200 off of our usual price. But we're going to be limiting it just to about Thursday at midnight. I keep touting our webinar program, but in addition to that, you're going to get market insights, commentary from Mark Chaikin. You're going to be part of our small group tutorials. We're going to get registered for a session for tomorrow. We're going to show you the ropes, show you how to become familiar with the program, how to navigate through Chaikin. You've got our small group tutorials. Again, we have recorded all of our sessions today. If you subscribe today, you can immediately watch the recordings from our sessions. The screener, you've seen a couple of profiles to use. You'll see a few more in the recordings that we offer. And the beautiful thing about this, if it's not the guidance that you get from either myself or Michelle or with Dan, you've got commentary from Mark Chaikin and John Schlitz, who have a combined 80 years of investment experience. All right. So plenty of extra goodies here within Chaikin. And you've seen it, 5 days, 2 weeks. You can, if you're somebody who's already trading options, you can immediately turn your results around. It's just about finding the right stock and getting yourself in position for the right setup. So again, if you think Chaikin is a little bit of a steep price, we've shown you plenty of examples where you can make twice your money, if not more, for the right earnings trade. Chaikin Academy, right? I just mentioned if you're an options trader or you're familiar with the market, that you can immediately have success. What if you're not in that position? Well, what Mark asked me to do back at the end of April, he said, Joe, we have a lot of subscribers who want access to Chaikin, but they need a little bit more familiarity with the market. I need you to create something where you can bring people very quickly up to speed, not just on the overall market, but also how to use Chaikin Analytics. So what we came up with was our Chaikin Market Academy, and this is probably one of the best contributions that I've made throughout my career, let alone just to Chaikin Analytics. Our Market Academy for the overall stock market in general is a 3-day session where we explain the behavior of the market, the trends that we see in the overall market, and how Chaikin Analytics is tailored and designed around the trends of the market. Again, we do this in 3 days, 3 hours each day, where we analyze the market, we analyze stocks, we analyze the overall your timing approach, right? If you're somebody who has had a hard time with getting your timing down, we're going to cover that here. And the reason why I'm telling you about this is that if you do subscribe by midnight tonight, we're going to give you free access. Typically, the course runs anywhere from $500 or $600 or $600 to attend one of the sessions. If you subscribe by midnight tonight, we're going to show you everything you need to know about the overall market. We'll give you full access to one of our sessions taking place in August. And again, all of those sessions are recorded, so you'll have access to it. But again, only if you do subscribe by midnight tonight. We're giving away the whole farm here. So if $200 off and access to Chaikin Analytics isn't enough, we're actually going to bring it down to our $1,650 webinar price. Again, this is a one-time payment to Chaikin Analytics for a full year's access to Chaikin. There is details in case you're wondering, what about refund policy? You can give us a call. I know we have details for all of that here. But again, we want to tell you all about the full program. We want to keep you focused on your results turning around. If you're a little discouraged by the overall market, if you're struggling to find the right stock, if you're getting in a stock at the wrong time, if you find a winner that's been doing so well and then it seemingly turns against you the day you buy the stock, we can help you with that. And I hope we've shown that today. So we'd love to have you join us again. Dan, closing words, anything you want to share before we go ahead and wrap up?
Yeah, I'll tell you, this the offer that we just made is really pretty incredible. And I'll be honest with you, everybody, we don't want you to subscribe for a year. We want you to subscribe for many, many, many years. We want to be partners in your success for a very long time. We've got a great retention rate. We have subscribers that have been with us from the very beginning. And here's what we know. People who are successful with Chaikin Analytics are using Chaikin Analytics. If you're not using Chaikin Analytics, if you're a subscriber and you're not using Chaikin Analytics, you're not going to be successful. We want to do everything we can to show you exactly how to use Chaikin Analytics for yourself. Besides this course that we're offering you, that's 3 days, 3 hours a day, a 9-hour in-depth course. You also get a recording of it afterwards, so you can go back and access at any time. We're available to you. We want you to be successful. I have so many of our subscribers that I have a great relationship with, an ongoing relationship. I have so many testimonials, so many phone calls that come to me on a regular basis. We want you to be part of the Chaikin family. So if you need us, give us a call, 877-697-6783. We're happy to talk about any of the screens that you saw Joe and I put together. Any of the sales guys are happy to walk you through their own ideas and talk about what's important to you. So I want to thank you all for hanging out and having me. It's fun to get on this side of the the telephone occasionally. But again, thank you all very much.
Awesome. So I'm going to go one step further here. I was just it gave me an opportunity. I know I wasn't able to directly address a lot of the questions that came through, but I saw there's a few questions about the options program. Again, if you're interested in some of the different option strategies that you can utilize, just to very quickly show you within Optionsplay, you're able to see a variety of different strategies. We looked at a few verticals. Let me see if I can get a better stock on the screen here. Let's go to Chipotle. So if you go to Chaikin Analytics here and pull up your stock, here's Chipotle, and I saw some questions about different strategies that you could use. So simply enough, if you go to our program here, you're able to navigate through a lot of pre-populated strategies, such as your credit spreads and debit spreads. If you're looking for those stocks, we can help you find them. Your debit spreads in particular, we like to focus on your put vertical, but to show you some other details, again, there's plenty of other information in the program to help you pull up maybe what your collar might look like. You can see how that's something you're going to want to avoid for Chipotle. Or you can go a little bit in depth, or really if you go back and consider, am I better off trading a put or going with a put vertical? That's exactly the type of comparing and contrasting that you can do with Chaikin, with our Optionsplay program here. So we want to tell you more about it, but again, we want to have you join us. Like Dan said, not for a year, but for many years to come, because I really do believe that we've got something very unique on our hands here, and we'd love to have you take advantage of it. So give us a call in. Again, we'd love to have you join us. I'll be hosting my next session tomorrow afternoon, our onboard session, all for our new subscribers. So please go ahead and give us a call, and we'd be happy to have you join us. So with that said, on behalf of Dan and the entire team here at Chaikin, thank you so much for joining us. Look out for the webinar tomorrow morning. The recording tomorrow morning. We did record this session for anybody who's wondering. We'll send it out tomorrow. In the meantime, have a great day. Best of luck, and we will see you next time.